here's the overall point that I was getting to you first thing this morning with the news announcements that and just news overall is that these things are already priced into the markets, and hopefully this is kind of a wake-up call for some of you, because if we're looking at the SPX, here's the index itself. This is what we were talking about this morning. Just before we got started, probably about 10 minutes before I clicked the record button on this session, I drew in this line right here at 3202. Let's go ahead and put that at a whole number. And because with that, I would be interested to see within the next 23 minutes here how the market closes. And should the S&P sell off and actually close below 3202, then everything that we've been talking about this week will be coming into fruition. So here's a 15-minute chart. Matter of fact, let me back this off or zoom in closer, and look at a 5-minute chart so we can actually see how the market is reacting right now. Obviously, current price is always the farthest right-hand candlestick, or the candlestick on the far right-hand side. Let's go ahead and take a look at the futures market. This is what we were talking about this morning. We were just waiting for it to move. And notice how this afternoon, by the way, this is when the Fed announcement came out. And so this is where all that volatility came into the markets. By the way, if you don't know what volatility is, this is volatility. This watch the crosshairs. This big green candlestick right here, all of this stuff is not volatile. All right. And so this goes for the lesson that everything and anything that could have an influence on the market is already priced into the market. And today is a great example of that. Again, just follow the crosshairs. The reason being is because, look, you guys, we talked about this morning, is these three purple lines on the S&P are pretty much in the same area, and they are going to be a huge area to where the market has to move through. It can either go up or down, but in my opinion, the market already showed its hand over in here. They've just got to shake some of the buyers out if they truly want to bring the market down, which should be absolutely no surprise to us that the market is doing exactly what it's doing right now. All right. And so most individual traders and investors on the retail side, would assume that with the Federal Reserve pretty much leaving rates unchanged and basically forecasting that they will leave rates unchanged until 2022. I believe that's what the article said. You can check me on that, but I believe that's what they said. I don't know if that's realistic. I don't know. Let's just see. But they are trying to obviously do anything that they can to stimulate the economy. Now, by the way, here's just a basic economics 101. How does the Federal Reserve stimulate the U.S. economy? In general, is they encourage consumer spending. So how do they encourage consumer spending? Is they drop interest rates low, and that way people will make major purchases. All right, and so people are more apt to go out and buy a house or buy a new car or a motorhome or things of that nature when interest rates are low. And that's exactly what the Federal Reserve is trying to do. And so here within the last 20 minutes of the market, of the U.S. market open today, I would not be surprised to actually see the market start to sell off here a little bit. And no, it doesn't have to. It's basically at a turning point right now to where it could rally right off of this area that it's at right now. Rally just basically means go up from here. All right. And so I apologize, I didn't draw this out for you a little bit sooner. However, if this price within the next 5-10 minutes can actually start to close below this little candlestick right here, the low, for the sake of the example, is 3201. If it can close below there, then basically what we're going to see is the overall SPX, the index itself, more than likely could sell off, close below this 3202, and that would be a sign of weakness going into tomorrow. We do have overall sign of weakness so far for the week. because of what we talked about on Monday, yesterday, and also this morning with this line right here being at, come on, where are you? 30 and 32, 13 and a half. All right. But it would even be a little bit more of a bearish signal should here within the next 19 minutes the index close off and sell off and close below 3202. All right. So with that, again, the overall trend is up, and so it doesn't have to do this. And this is why I've been saying for a while, especially over the last few weeks, is if you've taken some bullish trades, you may want to consider moving some stop losses up. All right, and that's just risk management 101 is moving those stop losses up. So anyway, coming back over here on the futures markets, you can see that right now they're pretty much unch. Unch stands for UNCH is basically the word for it. Unch means unchanged. All right, it's had a hell of a ride though today. If we put this on the daily chart and actually put our cursor over today, by the way, I'm going to look up here. So I'm going to be looking up here. The R over to the right-hand side stands for range. The futures markets, the S&P future for this example, has already moved 47.5 points today. So quite a volatile ride going into today, to whereas leading into the close here in the next 17 minutes or so, the markets really haven't done anything. It's been basically an unch or an unchanged. So all that means, you guys, is that we are still at a potential turning point here, and or a continuation point. So let me tell you what I just told you. If we are at a turning point, then it would be no issue or not a big surprise to see the market actually come down tomorrow. And if it does, it should come right back down to about 31.59. If not, it should rally right back up. And if it does rally and go up, I'm trying to zoom this in so you guys can see it a little bit better, then more than likely it could actually come into this area here, call it somewhere above 32.31, and even maybe even below 32.60, somewhere around in there. All right, unless it's extremely bullish, and then you'll see a close above 32.60, and if that happens, then we'll be looking for the price to come up to this area up in there. And so what's the best thing to do right now? Well, in my very biased opinion, if you've bought low with the goal to sell high, start to move some stop losses up, because if the market hits its head here and turns around and starts to come back down, I don't want to be the one to say I told you so. But if it continues to rally, at least you have managed your risk appropriately for the current market condition, and hopefully locking in some potential profits. All right. So I'm going to change this back to a 5-minute chart, because again, I'm really interested to see how this market is going to close. Now, this candlestick right here is less than 1 minute away from closing, because I changed it to a 5-minute. Now, some of you might be saying, well, I'm a long-term investor. Why would I ever want to look at a 15 or a 5-minute chart? Well, there's a lot of different reasons why we'd want to look at that, especially from a portfolio management and maybe even an individual trade management perspective. And this is kind of, I was hoping it would do it with this candlestick, but because it's doing with this, it's selling off with this next one. I don't want to say it again, but I'm going to anyway. We shouldn't be surprised with that at all. So if it does continue to sell off here, more than likely it's going to come right down to 31.95, and I would not be surprised to see within the last 5 to 10 minutes some selling pressure kick into the markets, and price. Matter of fact, here, let me zoom this out. I would not be surprised to actually see the futures pretty much close right down in this area here. Matter of fact, I'll make it a little bit more specific. Right here between 31.85 and 31.80. That's if we do see some big selling pressure kick in here within the last now 14 minutes of the U.S. market open. Now, by the way, do you have to understand everything that I'm talking about? No. You guys, I've been in this industry a very long time, and I am very intimate and familiar with how these charts move, specifically the futures markets. To me, a chart is a chart. It's not a big deal. But check that out, you guys. As price is going, I said if it starts to break down below that low there, then it should come down and test this line right here at 31.95. And sure in the heck did that, because it's there right now. And so I would not be surprised that if this bearish selling pressure here at the end of the day continues, the price should close somewhere. And I'm wrong too from time to time. But anyway, the overall point is I would not be surprised to actually see within the next 14 minutes now, 13 minutes, to market close, the price be down in this area. Now, I know I'm talking a little bit fast, and the reason being is because I want to try to make the point before the price moves, so you don't think that hindsight's 2020. No, what we need for this candlestick to do, and it's got about 2.5, maybe 2 minutes left for this one, because it closes they open and close every 5 minutes, because we're looking at a 5-minute candlestick chart. Ideally, we would love to see this candlestick close right here at this. This is the Globex low from yesterday at 31.93. If it can close there at 31.93, again, that would signify or signal or maybe confirm, that's a better word, that selling pressure is going to continue here towards the end of the day. And again, we'll see the market sell off. So this candlestick has less than 2 minutes left to go before it's closing. And if you want to get a little bit more in detail, you can come over here and look at the 1 minute. So this is okay that this is bouncing off right here. By the way, this is null and void now. This is null and void. That's null and void. Why? Because the price has already broken through it. But here's another little area right here. So on a 1 minute candlestick, and I don't even like to trade off of them, but I would not be surprised to see the price come up, hit that, just like it did now. And then if bearish pressure is going to continue, we could see a sell-off from here, as long as the price does not close above this little area right here. All right, so anyway, let me change this back over to a 5 minute, because sometimes people start to look at the 1 minute and they start to pull their hair out a little bit, but it's not a big deal. The overall point is, you know what? I'm interested to see what price is going to do here, because if it can turn around and start to sell off here within the minute, then what's going to happen is that 5 minute chart, and preferably if you are a little bit more neutral or bearish on the market, we would like to see a sell-off come in right here. If not, we'll see what price does in relationship to 31.99. Let's just call it 3,200 even, and that's actually a nice number, because it's a nice whole number, and big banks and institutions know that people in general think in whole numbers. And so, again, not surprised that the price is doing what it's doing here. This candlestick should close here within just a few seconds. And if it does, as long as it doesn't close above here, then we could, there we go, that one just closed. And I said, and then it's going to say now we could see some selling pressure come in, which basically on the 5 minute chart, I would have liked to seen this candlestick that just close below here, or at least there, but it didn't. So now let's just see how price acts right here at 3,200. If it can stay below 3,200, then we're still sitting pretty as far as if there are, excuse me, had to cough there for a second. If there is some potential selling pressure coming in here in the last 9 to 10 minutes of the U.S. market. All right. So again, I'm going to hold firm with this little yellow box there. If I'm right, so be it. If I'm wrong, so be it. But I feel better because I prepared you guys for looking at this price action right here, and we did that before the market even opened this morning. And so if you haven't had the chance to watch this morning's webinar, I would strongly suggest you go in and watch that, because I detailed where these lines came from, or I pointed out where they came from, and told you this is going to be a very significant price area that the market is going to have to deal with today. And so not surprised that the market did what it was doing this morning. Not surprised that it had a little bit of a bounce here after the Fed announcement this afternoon. But the overall point is there really is no continued bullish follow through. And so right now in the long term, I'm more optimistically neutral. Not so much bearish as far as, we really need to start protecting everything in our portfolios, but I'm a little bit more neutral and basically, again, making a humble, educated opinion of, if you haven't already, you may want to move some stop losses up just in case the market does want to go ahead and start to sell off. Because I'll tell you this right now, you guys, and we talked about this the other day. This move that the market's made is over 45%, over a 45% move from this low to roughly this high right there. Matter of fact, to that high right in there, if you look in the top left, and by the way, I'll show you where it's at, right here where it says percent change, just follow the crosshairs. Right there in blue, it says percent change, just right above the crosshairs. So if I bring that back over to roughly where that high is, and I'm kind of guessing a little bit there, it's about a 48 or so percent growth from that low to this high, to where back over here, from that point over to this point was only about a 12%. Matter of fact, I think it was this one. Hold on a second. Remove. What was the one that we were looking at the other day? It was like a 19% move. Yeah, it was off of this candlestick right there. And so very, very uncharacteristic move to the upside here. And so my overall point is from an economic standpoint, it's great when the markets go up. But here's the thing. It can't go up forever. All right? And this is a huge breath in, and it's got to give a little bit of that back before it can actually continue to go up. And so again, I would humbly throw out the idea of, hey, you might want to consider moving some stop losses. Notice that coming into the close, I changed it back to a 5-minute chart, that the price came up to this line, to this area, if you will. Remember, it's always an area, it's never an exact number. Hit its head there, and let's see here within the next minute or so if it can close below or start to get below this 31.93. Let's change it to a 1-minute candlestick so you guys can watch these candlesticks form. Okay, if it can start to sell off here, which if it does sell off, then it would have some more selling pressure, and more than likely, again, the likelihood of the price coming down and closing somewhere down in this area is a little bit higher. But if it can't, this again is a very solid line right there at 3,200. It's got another little potential area right there where it can hit its head, and we'll just see what it does. So as long as it doesn't close above 3,200 for the sake of the example, then we have a higher probability of price selling off here within the last 5 minutes of the market and closing down here in about 31.85, 31.80, somewhere around in that area. All right, everybody. And again, I'm not expecting you to understand exactly and everything that I'm saying, you guys. It took me years and years and years of study and trading and all this stuff when it comes to the overall markets. And that's why one of the goals with Investing Made Easy is just getting right to the point and focusing on the information that we need to know. And in my very biased opinion, that is price. Now, by the way, look at how this low just came right down to 31.93. That low is lower than this low, and it closed right there. And so if the bearish pressure is still on the market, then we should see this one now is a green candlestick. This should turn red, and preferably we would like to see it close at least right here. Now, this is not a support area by any stretch of the imagination. We'd like to see the candlestick that's forming right now come all the way down into here. And if it can do that, then within the last few minutes of the market, then there's a higher probability that it's going to come down here to 31.85. So, by the way, you can tell that volatility has basically left the market, which basically means as many buyers and sellers that are coming through that has left the market, because it's kind of uncharacteristic that right here at the very end of the day, price just actually flattens out a little bit, which is like silly. Which basically tells me that, hey, you're probably, if we don't get the move here within the next 2 to 3 minutes, then we'll probably see it within the last 15 minutes of the futures market. What that means is, for those of you who do not know, the stock market closes at 4 p.m. Eastern Standard Time, but the futures market trades for another 15 minutes afterwards. So if price does come here within the next couple of minutes, do you see how this is now starting to test lower than 31.93? By the way, that low is 31.92 and a quarter, or excuse me, 3/4. So it dropped one tick below that, which again, if we don't see some selling pressure step in right now, then we may see that after the U.S. market closes. So again, I don't mean to be a broken record, but here in 2 minutes is the market close. So this one's going to close now. The next one's going to open, and notice how that closed below 31.93. We are kind of still at a point to where we can see the markets come up a little bit, and that's just because of this candlestick right here. But that's why I have this line drawn here. Not so much a support level, and don't get that wrong, you guys. I studied support and resistance and patterns and all that stuff for years and years and years and years and years, and this is a completely different technique. So if this candlestick now can actually, there it goes, and say at least extend below that low, then again, we've got some selling pressure here in 1 minute and 15 seconds. We can see if the markets are really going to sell off. Now, by the way, the countdown clock, if you follow the crosshair and look straight up from where it's at right here, the countdown clock, we are 1 minute and 3 seconds away from market close. No big surprise that it's selling off here. We can go ahead and get this out of the way because it did close below that low right there. And now we're messing with yesterday's low. Yesterday's U.S. trading day low right there at 31.90, which is and was the bottom of our box from this morning, which basically meant it did break below that today, but it took this entire afternoon to kind of make its decision on where it wanted to go. And that's why, you guys, I was in this morning's session, I was saying it pays to be disciplined. It pays to wait. Back this morning, it actually showed you where its hand and where the market wanted to go. But it's got to give a little bit of that back. And that's why I was saying, hey, you guys might want to watch this area. Now, this is hindsight 2020, but the overall point is, for those of us that understand this price action right here, look exactly where it came back to. And now the U.S. market just closed right now, and I was off by 3 points. And now we should probably see some selling pressure come in. Matter of fact, that just closed right there, and so there it is. So that was the closing price, is 31.87. So I was off by two and 3/4 of a point. All right. So I said 31.85. It closed at 31.87.75, which now we should see some selling pressure come into the markets, which is actually a really good sign, by the way. Let's change that back to a 15-minute. Let's change this back to a daily. I want to bring back up the SPX and see where it closed in relationship of that. Do you guys see that? So now this is actually, by the way, this chart is closed. And so what this is telling me is that over the last couple of days, and we gave you, when I say we, I'm talking about Investing Made Easy, gave our members the heads up days ago. I drew this on Monday. It closed below it yesterday, and it just closed below it again today. Matter of fact, it opened right there this morning. And I identified this line at least an hour ago, and then made mention. By the way, I'm not saying this to give myself a pat on the back. I'm saying this for you brand new members, so you can see that market timing, or timing the markets, however you want to slice that, is absolutely possible if you know what to look for. All right, and so again, this should be a clear indication that the Fed announcement today, the projected move, was already priced into the market, and they probably priced that in last Friday, because this is last Friday's gap up. Here's Monday, here's Tuesday, and here's today. So the big banks and institutions more than likely priced in what the Fed could do or announce today by last Friday. And then they fed some type of news story out there. Well, by the way, it was the job stuff that came out last Friday that moved the market up here. But the overall point is, no, it doesn't matter what news report came out, because it just came up to an area to where there were some unfilled sell orders sitting. And so the overall discipline as far as trading is concerned over the last few days is just being patient enough to let the price move and let it do what it's going to do. Matter of fact, look at that. The S&P, the index itself, just closed at 3190, and I would dare to guess that the futures is probably continuing to sell off here. Let's change that back to let's go to a 1 minute chart. And yeah, it's oh, look at that. It came, man, it came right to that area, hit its bottom, and that's where it kind of stalled out here for just a moment. But you know, you guys, the overall point that I guess I'm trying to make here is I can't make this up. And what's really hard for the average person out there is to try to help them get over their erroneous belief system that they have been led to believe their entire life. And you know, and focusing on certain amount of information, things of that nature. But the overall point is, look, you guys, I said if the market didn't sell off during the market hours, you'll get the sell-off within the last 15 minutes, basically between 4 o'clock and 4:15, you guys, and it's doing exactly that. All right, it's doing exactly that. Now, that goes to tell me that our analysis from yesterday was spot on. And again, I'm not doing this to stroke the ego. It's more so just to solidify in your head that the market moves when it wants to move, not when you want it to move, or me, for the sake of that example. All right. And so we did see this coming. And my God, if you don't believe me, go watch our archived information over the last week, especially this week. Start with Monday's session and come through today's, and you will see that yes, we at INVESTINGmadeEZ has forecasted this move in the markets. We were just a day or two before it happened, and so therefore you're welcome, and we shouldn't be surprised that this is happening. Yes, I got stopped out on a trade from yesterday. I'm actually still in one and never did get back above my alert that I set this morning. So I have no reason to actually move this target here. All right, because if that selling pressure continues, the move that the market's made here at towards the end, not only yesterday and today, but especially towards the end of the day today, and let me get it back over to the SPX. This is why you've got to understand, you guys, before you get into a trade or an investment, you've got to understand what you're taking that trade for. All right, and so there's a couple of things that I have our students write down, our newer members write down, excuse me. And I said it this morning, and let me say it again. The first thing that I have people write down is this: the only thing I can control is the amount of risk I'm willing to take. The second thing I have our members write down is, from now on, I will know exactly why I'm placing a trade before I take the trade. I knew going in that, hey, we've had some counter trend trades going on from yesterday and today, but as long as the price did not close above 32.13 and a half, then we would be fine. All right. And again, I'm not trying to stroke the ego, or sometimes people say, well, you looked out. No, I didn't. Go watch the archive stuff from last Thursday. No, well, you can't. It's got to be this Monday. Go watch the archive stuff from Monday. You'll see the carry through from this morning, excuse me, yesterday morning, and we carried through with that same analysis with today. And again, even yesterday, I was saying, hey, 3190 is going to be a very significant area. So not only yesterday was it a very significant area on the futures itself, but it's a very significant area on the index itself. All right, so let me get back over to the futures. I am looking at the daily chart. Let me throw this over to the 1 minute, bring this back down, and look, you guys. Even though here is the market close candlestick right here, because this is straight up 2 o'clock my time, which is 4 o'clock Eastern. Look, you guys, we are what about, I don't know, what's 15 minus 7? What, 6 minutes or so away from U.S. market close? Excuse me, from the futures market closing here. And look, you guys, when the price was back up over in here, we made the determination that, hey, we could see price move right back into this area, and I don't want to be the person that says I told you so. All right. Again, this is not to stroke my ego. This is to help people out there, you understand that everything and anything that could have an influence on price is already included in price. And so this is why this morning and even yesterday I was pointing out, and more so this morning because it was updated numbers on these where these purple lines are. Because like I said, if the market closed below them, which it actually it did back here, it actually broke to the downside over in here, retraced back up here with the Fed announcement this afternoon, but it then started to close right back below it. So a trader or investor really had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 at least opportunities to do something around that area, and shouldn't be surprised again with what the market's doing here. Now, by the way, this is a target. So if you really want to know, I'm on one contract here, and yesterday I actually did this trade, and I'm staying disciplined. My entry is right there at 32.10. So I went short the market on one contract. All right, and so my target, just if you want to know, my target is right here at 31.71. Okay, the reason why it's there is because, like we said on Monday, that should the market close below 31.90, then it has a high probability, oops, I gotta get more time here, has a higher probability to come right back down to this little area right here, which is a major area to 31.59. And so sometimes people say, well, why do you have your target here at 31.71 when you think it's going to go down here, let's just say to 31.60? Well, bulls and bears make money, pigs get slaughtered. So I don't want to get greedy, but the other point is with all this price action that's right here, I want to make sure that, hey, even if it does come down here, I'm okay with giving up on that 10 points because I would have picked up, let's see, what is that, 29? I'm just trying to do the quick math in my head. So here, I'll just do it for you real fast on my calculator because some of you guys know that I suck at math. 32.10 is basically where the entry is, and that is that right there, 32.10 minus where the target is, the minus 31.71 equals 39 points, times $5 per point. That is $195 profit. Now, I'm just doing one contract. If you did 2 contracts, double that 195. If you did 3 contracts, triple that. If you did 10 contracts, times that by 10. All right, and that's 1950. All right, so yeah, take it for whatever it's worth. The other reason why I've got it down here is because with this price, whoops, I got to zoom in on it closer. Now, this area right here, this is not a support area. Okay, don't get that wrong. Okay, we would like to see the price actually break down below this low, and that is 131. Excuse me, 31.79 and 3/4. So if the price can actually break down below, again, that low right there at, come on, where are you? Where are you, Mr. Bucks? Okay, I'll just put it over that candlestick. 31.79 and 3/4, which right now it's 2 points higher than that, then there's a very high probability that this target will be hit. All right. So I'm not trying to, be narcissistic or anything here. It's more so plan your trade and trade your plan. If you fail to plan, you plan to fail. And the reason why I didn't get out of this is because I knew that we had a good entry. Even though we pulled or at least I pulled the trigger early yesterday, I did do a 2-contract trade. I got stopped out of 1 contract, and I believe I lost like $30 on that trade, 25 or 30 bucks, I can't remember, on the 1 contract. But as a matter of fact, I can tell you, because it's that difference right there between 140 and 117. So let's do that math. 140 minus 117 is $23. So I lost $23 on that earlier trade. All right, but anyway, you guys, I really do hope that this is helping, and I'm not expecting you to understand everything that I'm talking about, because I know that I get talking fast. I know that it's like drinking through a fire hose at times, but the overall encouragement from me to you is just stay engaged, stay showing up. You know, it takes a while for us to get comfortable with the charts. Now, by the way, I'm glad I flipped it back over to the dailies, looking at the futures market, because for the sake of the example, if we bring up our watch list and go in and look at, let's say, the global markets, for the sake of the example, let's look at, and I just going to bring it here because I can find it real fast. Look at that Nikkei. If we zoom that out, see how the Nikkei actually, I just wanted to get a bigger look at it, so give me just 1 second. To see how the Nikkei actually opened up here, and this was their trading day, and this is today for us, but this was yesterday for them. Their markets are going to open here in a few hours. But you see how it actually, even though it went up, it actually closed below that open and this open. So by the way, that open is 23.121. This open is 22.939. This open there was 23.135. So again, excuse me, I said that open. It's this close. This close is below that open and that open. All right. So which basically means that not only that is, look, this high, their high from yesterday is lower than that high and that high too. And so I would not be surprised to actually see the Nikkei do something like this during its opening session, which again here starts in the U.S. in just a few hours here. And it would be great to actually see this type of a candlestick if you are bearish on the U.S. market. It'd be awesome to see the Nikkei do something like that, because that could solidify the downward move in the U.S. market. So let's change it back to the futures chart. That could solidify a move in the U.S. market right back down to this 31.59. Okay, which basically means it should make that move while we are asleep tonight here in the U.S. All right. All right. Now, if it doesn't, then price would come back up here. It's gonna, if it does retest this 32.10 area, then it will come back up to 32.20, and maybe ultimately come up and test 32.50, maybe even 32.60. All right. So just an FYI with that, and don't be surprised if that does happen. Okay, everybody. All right. So with that, Let's get back in and take a look at the NASDAQ. Here's the NDX. Just a second, it didn't go. NDX. We'll take a look at this. Beautiful little move today. Nice little sell-off on the overall index. I'm just going to do this so I don't have to do math. And I would have preferred it to actually close below this little area right there, but it did not. It basically closed right about that area. So let me thicken that line up a little bit. We'll go in on to look at a 5-minute, well, actually, let's look at a 15-minute chart. And basically, that's where it closed, just basically right above that. And so that all that means, you guys, is the NASDAQ had some bearish pressure coming in at the end of the day. The NASDAQ has been the stronger of the two indexes when you're comparing that to the S&P. Therefore, the S&P is showing more weakness right now. So if the NASDAQ were to go down and basically stay below this whole area down here during the overnight session tonight, if it can go down and stay below that, then more than likely it's going to come down and hit this area right here, which we identified a few days ago at 98.50. If that were to happen, then again, there's a very, very high probability that, let's look at the S&P futures, that again, the S&P futures will come down here and hit this 31.59 or 31.60 area. And by the way, look, I don't want to say I told you so, but I'm going to anyway. I said you could see the futures closed anywhere between 31.85 and 31.80, and look, it closed at 31.85 and a quarter. All right, so don't want to say I told you so, but the overall point here is price does not move on accident. All right, and I would encourage you to get your friends and family involved with Investing Made Easy. And I'm going to be a little bit selfish with this next statement. The value you guys are getting for your monthly subscription rate is unheard of in this industry. I have had so many of my colleagues and people that I know on the institutional side of the market basically tell me I'm crazy for not charging more money. But the overall point for me is it's not about the money. It's helping people and helping people protect themselves against these big financial institutions that want to just charge you fees. I mean, my God, in a 401k, you are more than likely spending a hell of a lot more in fees on a monthly basis than you would ever, for the sake of the example, by being an Investing Made Easy member. So I don't know. I'm just a little bit emotional about that because I know the value of what you guys have at your fingertips, and I just really am encouraging you to stay with it and stay on track. And we're just here to help you. Okay. All right, you guys. So I meant to actually show this to you again, but I got out on a soapbox there for just a moment. But anyway, I hope you guys have had a good time over the last 45 minutes or so. I'm going to go ahead and cut this off just a little bit short, just because I think enough damage has been caused. And the overall point is this: if you missed it earlier, if you have some stocks that you have bought low with the goal of selling high, you may want to consider moving up some stop losses, because I think we have done a hell of a job this week, even though we've had to be patient and I sounded like a broken record day in and day out. I think it would be to our best interest to consider moving some stop losses up, because if we get a pullback in the market, I don't want to be the person to say I told you so and why didn't you take action. All right, so it doesn't mean that we're going into a down market right now by any stretch of imagination. What that basically means is if we do get a pullback down to 31.59, or let's just call it 31.60 area, the market could actually consolidate and go sideways for a little bit, which basically means we'll have some days that the markets are up, we'll have some days that the markets are down, but it'll stay range bound. It'll stay between two walls, or between a floor and a ceiling, if you will.